Picture this. You're scrolling through real estate listings, imagining a gorgeous desert sunset from your very own Arizona patio. It's an incredible dream, right? Buying a home here is a massive milestone. But we've got to do a quick reality check. While that sticker price might look absolutely perfect on paper, unexpected monthly costs have a nasty habit of sneaking up and turning a dream home into an incredibly stressful situation. So the absolute most critical priority, literally before you even think about attending an open house or putting in an offer, is knowing exactly what you are signing up for. And that means running the numbers first.
Welcome to today's explainer, where we're demystifying the Arizona mortgage calculator. Think of this tool as your essential digital secret weapon. It's specifically designed to shield you from financial surprises and ensure that the home you're eyeing actually fits your long-term goals. Using one of these calculators before you make a purchase, it isn't just a good idea, it's a completely critical step to confident homeownership. So, here is our roadmap for today. First, we're uncovering hidden home costs. Second, we'll build your digital financial roadmap. Third, we'll see exactly how variables shift your budget. Fourth, navigating local Arizona markets. And finally, some great strategies to lower your payment.
Let's dive right into Section 1, Uncovering Hidden Home Costs, because we all know it's about way more than just the sticker price. There's this great quote from a financial planning expert that hits the nail on the head. The goal of financial planning is not just to buy a house, but to ensure that the house does not become a financial burden. This is exactly why checking a calculator before you buy is mandatory to protect your peace of mind. Your ultimate goal isn't just getting the keys, it's keeping the keys without losing sleep over your bank account.
Honestly, it's shocking how quickly extra costs can eat into a monthly budget. A good Arizona mortgage calculator won't just look at your principal and interest. It factors in all those hidden layers. You've got property taxes, which are based on local county rates. You have homeowners insurance, which lenders require. You've got HOA fees, which are super common in Arizona's planned communities. And then there's PMI, or private mortgage insurance. If you put down less than 20%, this extra cost gets tacked on to protect the lender. Trust me, all of these add up fast.
So how do you actually know if all those costs combined are too much? Enter the golden rule of budgeting, the 28-36 rule. This basically means your total housing costs should stay under 28% of your gross income, and your total overall debt, including things like car loans or student debt, should stay under 36%. Plugging your expected costs into a calculator keeps you safely within these guardrails, preventing you from falling in love with a home you can't truly afford.
Okay, moving right along to Section 2, your digital financial roadmap. Let's map this out.
For first-time users, the process is incredibly straightforward. It takes just 4 simple steps to get a highly accurate baseline estimate. Step 1, you just input the home price. Step 2, add your expected down payment, and the tool automatically calculates your total loan amount. Step 3, choose your loan term, usually 15 or 30 years. And finally, Step 4, enter the expected interest rate. Boom, you get instant feedback on your monthly payments. You don't have to sit around waiting for a lender to guess. You have the power right at your fingertips.
The calculator is also going to generate what's called an amortization schedule, which is essentially the true map of your entire 15 or 30-year journey. What you'll see here is that during the early years, sadly, most of your payment just goes straight toward interest because your loan balance is at its highest. But stick with it, because as you keep paying, that balance goes down, the interest shrinks, and more of your money actually goes toward building real equity in your home.
All right, Section 3. How variables shift your budget. This is where you get to play financial architect. As the architect of your budget, you've got some great strategic options to play with. If you input a higher down payment, your monthly payment decreases, and strategically, you reduce the total interest paid over the life of the loan. Pretty great, right? What if you opt for a longer loan term, like 30 years instead of 15? Your monthly payment goes down, which improves your monthly cash flow and gives you some breathing room. On the flip side, a higher interest rate obviously increases your payment, reflecting market risk. And looking at a lower home price universally decreases your burden and bumps up affordability. You can literally test all these scenarios in seconds. You also get to compare different loan paths. A fixed-rate mortgage means your interest rate never changes. It acts as a total shield against a shifting economy, offering long-term peace of mind if you plan to stay put. An adjustable-rate mortgage, or ARM, well, that's a different strategic play. It gives you lower initial costs, which is awesome if you're a short-term owner planning to move in a few years, but you carry this serious risk that payments can, and often do, increase later on.
And while we're on the topic of rates, let's clear up a massive point of confusion for buyers: interest rate versus APR. Your interest rate is just the yearly base cost of borrowing money. But your APR, or annual percentage rate, is always going to be higher. Why? Because the APR paints the full realistic picture of your debt. It includes the interest rate, plus mortgage insurance, closing costs, and other lender fees. Always, always pay attention to the APR when you're running your numbers before making an offer. Let's move into Section 4, Navigating Arizona Local Markets, because real estate math is definitely not one-size-fits-all here. The crucial point here is the urgency of getting local pre-purchase estimates. Generic national averages will totally fail you in Arizona. Property taxes vary heavily by county, meaning the tax rate in Gilbert might look vastly different than in Scottsdale, which directly alters your monthly escrow payments. Plus, fast-changing price trends in hotspots like Phoenix and Tucson mean your borrowing power shifts constantly. You also have specialized options. If you're a veteran, an Arizona VA loan calculator can show you zero-down options. First-time buyers can test an FHA loan calculator to see the impact of a lower down payment. Local data changes everything, folks, and you need it before you bid. Finally, Section 5, Strategies to Lower Your Payment. Let's look at some actionable tactics you can use right now. Here are your pre-purchase power moves. First, aim to put down 20% so you can completely bypass those pesky private mortgage insurance fees. Second, shop multiple lenders. Even a fraction of a percentage point difference saves you thousands over time. Third, check your credit report for errors, because a higher credit score secures lower rates. Fourth, use your calculator to analyze early payoff options. Adding just a tiny bit extra each month can drastically slash your total interest. And finally, if rates drop in the future, use a refinance calculator to see if you can snag a better deal. Look, nobody actually likes doing hard math on their own, which is exactly why letting a digital calculator test these strategies for you is so incredibly satisfying. But as brilliant as these digital tools are, remember this: they are the ultimate planning baseline. They are your roadmap. However, local experts like MidFirst Bank, Fairway Independent Mortgage, or local Arizona credit unions, those are the actual guides who grant your final loan approval. A calculator can't look at your complete credit history or verify your job. So use the tool to plan with authority and confidence, but always consult the pros for your final financial review. So before you ever step foot into an open house, ask yourself, are you relying on a best guess budget, or do you actually know your numbers? Don't let a desert dream home turn into a financial mirage. Grab a calculator, test your limits, and take absolute control of your real estate journey today. What will your numbers reveal?